You got to be flipping my flapjacks. Back to the regularly scheduled programming, folks. Public count $36,000 plus up here today. I'm sure you guys are making some good money out there in the market here today. And why is that? It's the usual suspects. The usual suspects are doing very well. Look at Tesla, massive 5% plus move here. $22,000 plus up in the public count here today. Meta's having a good day. $20,000 plus up in that one. Google's earnings are obviously coming out in the next 24 hours. That's going to matter significantly to Meta. It's going to matter significantly to the entire market in a huge, huge way. NVIDIA stocks rolling up nearly 5% here today, up $1,700 in the public count. Smaller position for me overall, right? Meanwhile, we got a very, very, very popular stock in the market that now is down 50% plus in the past 2 months. And this is during a good stock market. This is honestly the most vicious crash I've probably ever seen, to be quite frank, for a popular stock, because usually if you're going to talk about a 50% plus drop for a stock in a matter of a couple months, especially when it's a popular stock, that is, right? It's a well-known stock. It's usually got to happen during a market crash or a major market correction. This is during an up market. This is incredible. So we'll speak about that stock in this video, okay? Then we're going to talk about this one's even another level of insane popular stock that every single time the stock bounces, it gets sold right off, down another 3% plus in regards to that one. We'll talk about if that's an opportunity. Shopify continues to go down. That stock just can't catch a break. Down over 17% for this year. And it's crazy. Look at the divergence between the Qs and Shopify. I mean, this is one of the biggest divergences you'll ever see between the Qs and Shopify in a short amount of time. Absolutely incredible what's going on there. Now, meanwhile, since the IPO of Shopify, obviously Shopify's destroyed the NASDAQ. Shopify's gained 1,600 plus percent since 2015, whereas the NASDAQ's up about 339%, right? You have Ulta Beauty down again here today. That stock's sitting on only 11% gain in the past 5 years for one of the most well-run retailers in the entire world. We've got to talk about Ulta. Look at this. Company last year did nearly $1.3 billion in net income. And if you compare that versus a few years ago, they were doing $650 million in net income, right? This is where valuation matters. Think about it. Back then, the company was trading at forward Ps in trailing 12-month Ps, probably a 30 plus, which is pretty expensive for a retailer, right? But now you look at the stock, forward P of 15, trailing 12-month P of 14, 2-year out forward P 13. Ooh, okay, so now we're getting a fair value. So we'll speak about that. Boston Beer Company, now down 27% in the past 5 years. That's another stock that's addicted to going down in an up market. You got to think about it. What if we were in a tough market? How much would some of these stocks be down, right? If it wasn't for the S&P 500 NASDAQ hitting new high after new high after new high, you got to ask yourself. And I need help. I need everybody's help in the comment section. Please do me a favor, okay? Do you drink beer? Yes or no? Let me know in the comment section. If you do drink beer, how often do you drink beer? Is it like every day after work? Is it like once a week on a Friday night, or once a month, once a year? Please let me know if you drink beer. And if you do drink beer, how often? I would love to hear from you guys in the comment section, because I'm genuinely curious, because I'm doing some research in Boston Beer Company right now, trying to get, up to date in regards to the company. I'm just trying to figure out, is there like a fall off in regards to beer sales? Maybe people don't drink anymore because it's too expensive. I don't know. Like maybe just people aren't interested in beer. I don't know. All I know is this stock is doing horrible. I'm doing some work on it, trying to see if there's an opportunity, okay? So we got a lot to talk about in this video. Let's talk about opportunities in this market. Let's talk about some fake opportunities in this market and all those sorts of things. Appreciate y'all joining me as always. Thank you so much for being here. New all-time high subscribers in the history of the channel. 733,000 and almost 500 subscribers now at this point in time. Appreciate y'all. And for the pinned comment down there today, if you're looking to take your investing game up to a much higher level than where you're at right now, you're looking to take investing serious. Well, for serious investors, I have my private group that gives you access to all my premium course curriculums, teaching you everything I got up here, gives you access to the private Discord chat, access to exclusive weekly videos teaching you different things. I produced a video for the private group just last night that we released this morning that went all into my hedges over the past couple of years. What hedges have gone well? Why did they go well? Which hedges went bad? Why did they go bad? So, we get into a lot of those more complicated subjects that, you might not cover on YouTube, right? Alrighty, so first up here, what is this popular stock that just keeps crashing? And is this an opportunity, okay? It's Celsius. I mean, this stock is in complete free fall. And this is probably the worst stock I've ever seen for a 2-month crash because it's such a popular stock. I mean, here's the deal, okay? The market's up about 5% in the past 2 months. You can look at the S&P 500, you can look at the NASDAQ, up about 5% roughly in the past 2 months, which is great performance, by the way. I mean, that's about as good of a market as you can imagine. So we've had about as good of a S&P 500 performance and NASDAQ performance as you could imagine. Around 5% in 2 months? That's phenomenal. And yet the stock has still crashed 50% plus in the past 2 months, right? There's been relentless selling on the stock. It seems like there's no big buyers stepping up for this stock. We're not getting any news of anybody coming to save the day in regards to this one, right? And this is all during a time period, and I'll show you the details around this, when Wall Street's heavily bullish on this company, which is one of the scariest things you could ever see. One of the scariest things you could ever see in the market is when Wall Street's all bullish on a stock, and even with all the help of Wall Street and all the analysts coming out and being positive on a stock, it's still crashing nonstop. This is downright frightening in regards to the stock, okay? Check this out. So the first one, look at this. Celsius down 50% plus in the past 2 months. And look at the S&P 500, 4.5%. NASDAQ's up about 5.8%. That's as good as it gets. That's as good as it gets from the index level, and this is as bad as it gets for a stock. That's a ridiculous divergence. I mean, it's one thing if a stock falls in an up market. It's another thing if it loses half its value in that short amount of time, right? Brutal selling. I mean, the chart is self-explanatory. You don't have to be some technician to look at this chart and be like, that's brutal, man. Look at this. The falls, when this stock falls the past 2 months, it is like down in a straight line. So when whoever steps up and starts selling the stock, they are just brutally selling. And when I say brutally selling, they're just selling at whatever price. Like, they don't care. They literally don't care. They just want out. That's always scary because you're like, why are they pushing that fast out of the stock? Like, is it that bad? And then you got to worry about also the dynamic at play, where essentially stop losses are being hit, and you get a brutal amount of selling, and you got a fund or whoever, a high net worth individual, whoever, just like, get me out of that stock, so they want out, right? Then other people's stop losses get hit, auto sell, right? Those auto sells hit, they produce more auto sells, they produce more panic and fear in regards to stock. And look at this. I mean, look at these drops. It is just down in pretty much a straight line. It's like people are like, literally, I don't care what price you get me out at, get me out, get me out. I don't care if it's 90, 80, 70, 60, 50, 40, get me out of this stock, right? Third thing is, you look at news in regards to Celsius, where's the big buyers at? Like, usually you would think with a stock that's as popular as this, and with as much kind of, let's just call it as big of a move down, you would think there'd be some news of somebody, some fund, somebody stepping up and buying the stock and saying, hey, we got problems with the company, we're going to come in, we're going to be activists, we're going to help fix this problem. You would think you would see something, and we just don't see anything. There's just no news about a big buyer coming in to save the day, which then makes you say, okay, because it's not like Celsius is a hidden stock like it was 5 years ago. It's a very popular stock. So why are all the big guys saying we want no piece of this, right? That's another thing you kind of got to ask yourself in regards to a situation like this, right? But the fourth thing, and the scariest thing by far in regards to this whole situation in regards to stock, right, is Wall Street is heavily bullish on this stock right now. And even though they are heavily bullish, it doesn't matter in regards to stock price. Check this out. This is analysts, or do they think the stock's a strong buy, a buy, hold, sell, or strong sell? In the past 90 days specifically, so this is recently, right? 8 analysts, so by far and away, the most analysts, believe the stock is a strong buy. Then you have 6 analysts that believe it's a buy. So we got 14 out of 18 analysts, right, that believe it's either a buy or a strong buy. And that's in the past 90 days. 3 are at hold. None have a sell rating on this stock. And only 1 has a strong sell. So there's only 1 analyst who's actually truly, really bearish in regards to Celsius. Which makes you think, what's going to happen if Wall Street starts to turn on this stock? What happens if these strong buys move to buys or holds? What happens if the buy moves to hold or sells, right? And what happens if those holds then move to sells and strong sells? What happens when you get the whole huge down cycle in regards to the stock price, right? Because we know these analysts always come out with not just do they think the stock's a buy, a sell, a strong buy, but they also, additionally, right, they all come out with their price targets, their 12-month out price targets. And these price targets are insane. You guys see the price targets? The high is 110. The average is around $80, just under $80. The stock's 47. So analysts are likely going to have to chase this one down, which adds more fuel to the selling pressure as Wall Street starts to get more and more bearish in regards to stock, right? And so when you think about the Wall Street down cycle that could be coming in this one, you could get another 50% down move here. Now, I wouldn't bet on it. I'm not like, oh, let me play some puts on here because the stock's going to 20, 25 bucks. But I wouldn't be surprised if you saw another 50% drop from 47 right now, or 48, right? And it goes down to 24 or something like that. All you need is all those Wall Street folks to all of a sudden turn from bullish to bearish, and you'll get there. Because that will just be a whole new level of selling pressure in regards to stock, right? But you're getting, obviously, Wall Street concerned. We're still in the early innings. I think we're kind of in the first or second inning in regards to Wall Street being concerned with what's going on here at Celsius. Celsius flirts with 52-week low amid sales growth deceleration concerns. Celsius fell again on Monday. Crazy thing is, when I'm taking those screenshots, that's not even the lowest. It was down like 6% earlier in the trading session, right? The energy drink stock swapping hands at the lowest level of the year and threatening to breach the 52-week low of 45 bucks. B. Riley Securities lowered estimates on Celsius holdings and cut its price target to $80. Think about how bullish they still are. The stock's in the 40s now. And you got this guy coming out, he's lowering his estimates, he's cutting his price target, and he's still at 80. That's frightening. That is downright frightening, right? And I understand if you're kind of newer to the market, you might not get why this is so scary. But I'm telling you, like, if you've been in the market a long time, you're looking at something like that and you're like, that's downright frightening, man. That these guys are still that bullish? Like, what happens if they actually change and they're like, oh, no, like we're wrong in regards to this, and they flip the sides, right? He says, quote, although Celsius sales are still growing, gleaned from snippets of third-party data that we do not subscribe to, I'm guessing that's Nielsen data they're referring to, right? The rate is moderating substantially, impacting to some degree by broader backdrop of the energy drink category, which ex-Celsius has been running negative. Now that's scary that the energy drink category has been running negative. Either there's a move out of energy drinks in general, which is obviously extremely bearish for Celsius, because then you could talk about a shrinking TAM. Maybe there's something going on in the economy where people aren't getting as many energy drinks because they're not getting as many hours or things like that. Like, that's all stuff to consider, right? A lot of the folks that drink Celsius work, I mean, I don't want to say everybody, but it's a big portion work like blue-collar jobs, hourly jobs, things like that, right? So I don't know, something to take into account. Separately, Morgan Stanley has warned that investors could stay cautious due to the difficult sales comparisons for Celsius over the next several quarters as the company cycles through the distribution and velocity growth. That's another trouble. They're dealing with potentially the category running negative, right? Their sales aren't looking great, but then you're also comping against ridiculous numbers last year. And Celsius has to comp against those for the next 4 quarters. It's not like it's just one quarter. They got to comp against these numbers for the next 4 quarters. So if Celsius sales are really bad for the next 4 quarters, when they're comping against these insane sales numbers from last year, it's going to make their revenue look horrible. It's going to make their sales numbers in general look horrible, man. That's frightening. On Friday, seeking alpha analyst Ironside Research with the latest firm to come out with in the defense of Celsius, right? And Celsius, it definitely does have a lot of defense, and I think you do have defense there unless the numbers really get bad. If the numbers we see from Celsius really get bad here and the guidance gets really bad, then I think even the people that have been coming out to the defense of Celsius are even going to move to the sideline. That's going to be a whole other dynamic there. And until the numbers get really, scary in terms of the numbers a company puts out, not Nielsen data, like company numbers, people will still come out to the defense. If I'm telling you though, if the numbers come out bad and the guidance comes out bad, these folks that are coming out to the defense of Celsius, they're going bye-bye. And they'll go on the sideline as well. While we think there is still a risk that the demand for energy drinks could be waning, we believe that more data is needed before declaring the death of the energy drink market. To conclude, we cannot say definitively that Celsius's growth story is over, but it does not seem to have entered. It does seem to have entered a new chapter, one in which management seems capable of meeting head-on. We'll see. We'll see if management they haven't gone through that cycle, right? They've just kind of been growth. We'll see what happens here. Yeah, I think it's going to be interesting to see if management meets that. Maybe they do, maybe they don't. But this is a big question mark stock right now. It's one of those you look at, and I don't know where the bottom is for Celsius. That's the bottom line. As much as I looked into the company, I've gone to different stores, seen kind of their product fit and whatnot, talked to a lot of folks. I don't know where the bottom is for this one. And that's scary, because usually I can kind of think about a stock and I'm kind of like, I can at least put a number out there in my head that I'm like, I could see it maybe going down to this kind of in a bearish scenario. I don't even know if I can put a number out there. Like I said, 2025, something like that. Whew. Then you got to worry about, once you get down to 2025, let's say that's actually the bottom, right? Maybe it's not. Maybe now is the bottom, right? And it goes up from here. But let's just assume for a second 2025 is the bottom. Then you got to worry about getting all the way back to where the stock is down, right? And that's just like, ugh. And so that's why Celsius, as much as this one's kind of intriguing, and I used to own Monster many years ago, right? Did me phenomenal. I can't step up and buy this one right now. And the other problem with energy drinks is they come and go, man. Let's be honest with you guys. There's two companies that have been lasting in the space. One is Monster and one is Red Bull. And as somebody that worked for Walgreens for many years, as somebody that worked for Quick Trip and management for many years, right? I got to see all these energy drink brands come and go. And the two that remain super successful were always Red Bull and Monster. Outside of that, Rockstar was really big, then that started to fall off. Full Throttle was big for a bit, that started to fall off. Bang Energy was huge, like 5 years ago or so. And then that fell off. Monster owns Bang now. That was a whole complicated, crazy story I could tell you about sometime. Like, I've watched so many of these brands. There was Amp Energy that was like big for a little bit, and then that fell off. And so I don't know. Celsius is going to be at a funny moment for the next, I would say, year or two, where it's either going to have to become Red Bull and Monster. And I think if you're betting on Celsius, you got to be bet that it's going to become the next Red Bull and Monster. Or it's just going to be another energy drink brand that kind of falls to the wayside, like pretty much all the others, right? So we'll see. We'll see how that dynamic goes over the coming years, but that's a situation. Now, another drink stock that can do no right is Starbucks, right? This stock down another 3.33% here today. Stock's down 25% plus in the past year. Now, just on Friday, big news all of a sudden came out, right? Activist investor Elliott has built a stake in Starbucks, Wall Street Journal reports, and within seconds, the stock was up 6-7%. Boom! Boom, up in a straight line. Elliott Investment Management is reportedly pushing the coffee chain in ways to boost its floundering stock price. With Starbucks Corp shares slumping this year in concerns over the cooling demand, the coffee chain has reportedly attracted the interest of major activist investor Elliott Investment Management. The Wall Street Journal on Friday reported that Elliott has amassed a sizable stake in Starbucks and was discussing ways to move the chain's stock price higher. The specific size of Elliott's stake, as well as the specific accompanying demands, this is so silly. I'm like, they're worried about moving the stock higher. How about moving the company in a better direction, right? And this is why I don't like any of these activists, to be quite frank. Because all these activists, they're just after short-term money. They just want the stock to pump and then move on to the next thing. That's all they want. These guys don't really understand like making an investment thesis for the next 5-10 years. They're not Warren Buffett's, okay? They're not any of these investing legends. These guys are there for a minute, trying to pump the stock higher in the short term. They'll sell all their shares right on the back of that pump, and they're out. They're basically massive pump and dump schemes is what a lot of these funds come down to. They're not there for the long term. They're just like, how do we get the stock price higher? How do we get let's buy the stock. It's gone down a lot. How do we get the stock price higher? Like, dude, worry about the fundamentals of the company. Worry about where this company is going to be at 3 years from now, 5 years from now, 10 years from now. Not where it's at for the next 3, 5, 7 weeks. But that's how these guys are. And then all of a sudden, the stock will go up after a while, and then all of a sudden, next thing you know, they sell all their shares out. And all of a sudden it comes out, oh, Elliott or whoever, they don't own any more shares than the stock. It's a joke, man. And so I think it's a joke whenever these stocks go up because somebody like this bought it. I think it's a joke. Like, don't go up for that reason. Like, if you're buying the stock because Elliott bought in, you're making a massive mistake because they will dump those shares right back at you as soon as that stock gets any upward move. And then if the stock goes down and they don't get their way with the board, guess what they're also going to do? Dump their shares. And then if they've built a sizable position, they dump those shares in the market, guess what that's going to create for the stock? Boom! Another big old downward move there, right? Now, as far as Starbucks, the stock's priced right. The stock is priced right. This is a stock that I think if anybody buys a stock in the 70s, or especially if it goes in the 60s, I think you're looking pretty good for the long term, right? In the next 3 weeks, 3 months, who knows, okay? But the bottom line is for the next 3, 5, 7 years, you're looking really good. Forward P's under 20 on this stock. You look at something like a Bros. I really like Dutch Bros, the company, but the valuation's very concerning with this stock. Forward P is 127, the trailing 12-month P 477, the 2-year out forward P, 2-year out forward P 80 roughly for the stock. So this is, Bros sets up, like, Bros could fall 50% plus, right? It doesn't mean it's gonna, but you got to understand, if Bros all of a sudden has some concerning growth metrics or something, the stock will fall 50% plus like that. If there's any sort of major market correction or crash, 50% plus. Starbucks can't really get hit like that now at this point in time because the valuation is there now, right? It's such a compelling valuation for Starbucks that people will buy that stock up if it even approaches like a forward P of like 15 or so. Bros, if growth rates aren't there, no one's going to step up to buy that stock. It will just kind of flounder and just go down and down and down. And you'll have a Celsius type situation there. So that's what you got to understand, kind of the risk you're taking in regards to these stocks, right? And if you're buying the higher valuation names, a forward P of 127, you just got to understand you could be setting up for a major crash in regards to that stock. That brings up Shopify, right? Because Shopify is a company that always trades at very much higher valuation, right? And this is a stock that's obviously having a lot of trouble. And with the stock like Shop, the valuation's coming more in line, but it's still high, right? 63 forward P, 2-year out forward P 44. And when you're buying growth stocks, and I don't think this is a part most people prepare for when they're buying growth stocks, they just think about the upside, and I'm going to make so much money on this stock, right? You got to be prepared for this part as well, right? Because the whole thing with buying growth stocks is you're hoping to hopefully outperform the market significantly over the coming years, right? But when you're buying into these higher valuation names, as soon as they miss a couple metrics here and there, you could get a stock that actually significantly underperforms the market, and that's no fun, right? No one wants to be owning a growth stock that should be outperforming the market, and the growth rates are much higher than the market is at, right? And yet you're underperforming the market. So that's something it's a risk you have to be willing to take, and that's why when I invest, I never invest into just growth stocks. If you understand my investing strategy, it's growth, it's value, it's dividends. I own some growth stocks. I own some super high growth stocks. I own some value stocks, and I own some dividend stocks. I own a mixture, and that diversity helps me in a very substantial way. And sometimes you can get growth stocks at very undervalued valuations. That's a very beautiful opportunity when you could, like Meta is a good example. That's a growth company, and back in 2022, it was trading undervalued. Like, it was so undervalued, it was ridiculous. I mean, the forward P got down to like 11 on Meta? Come on, man. Like, what are we talking about here? This is a growth company, so every once in a while you can get those freak situations. That's when you need to take advantage of every growth stock you can get an opportunity of. This market's a little different, by the way. This market, you need to be focusing more on values and divs than growth companies, but nonetheless, okay. Ulta, down, this stock just continues to flounder, right? 11% for one of the best stocks and retailers out there in the past 5 years, right? I went to Ulta on Friday. And I spent $5. $5. I think the lady was looking at me and she was like, "Sir, you could probably just walk out with that. Like, it's not even worth my time, like, checking you out for this thing for $5. Probably the customer that spent the least money in the history of Ulta Beauty. Like, I went in there, right? And it's just funny because I'm like, I spent $5. I spent too much. And that's guy logic, right? It's like, guy logic, I can spend $500 a week on investments in the public account. I spend 4 figures a week basically buying stocks. Between the public account, between the Patreon portfolio, and then my private accounts, I spend 4 figures a week, every single week basically, buying stocks, right? And I don't even think about it, right? But I would spend $5 at Ulta. I'm like, man, I don't even know if I should have bought that thing, right? I could spend 6 figures on a pool. But the way I look at a pool, big, got to have a great waterfall wall here. It's going to look beautiful. But the way I think about this, I'm like, oh, it's an investment. That's the thing. You could sell me anything as long as I can view it as an investment, right? I'm like, oh, yeah, I'll spend 6 figures on a pool, but it's an investment. The pool, the spa. Then when I rent this house out someday, or if I sell it off, like, I'm going to be able to get the money out. Like, it's an investment, right? And you should see the backyard. It's like a brick warehouse back there. I'm spending $10,000 on a very nice built-in barbecue, right? It's an investment, baby. It's an investment. Got to cook up the steaks, spending $30,000 in the front on this big elaborate fountain for when you come in. Hey, man, it's an investment, right? Now, expensive watches, I regret that. I regret buying expensive watches. I will say that. Definitely regret that. Like because it wasn't an investment. Like, watches usually go down in value, right? So that's something that I bought that I spent good amount of money on a few watches, and I'm like, that was dumb. Like, I can't justify that, right? Because I'm looking at it and I'm like, that was not an investment, right? Now you might say, hey, you should have just bought Rolex. You should just buy Rolex, dude. Like Rolex. Well, one, I don't like Rolex. It's not my style, right? I'm new money. Like I grew up in the hood. my mom cleaned houses, right? My dad cleaned swimming pools. I helped them do that as a kid, right? Grew up very poor for all my younger years, right? And so you just got to understand this difference between new money and old money. And new money, we like flashy things. We like, we like that type of stuff. Rolex isn't flash. Like Rolex is very like low key, old money type style. Like my kids will probably wear Rolex someday, right? Because they grew up with money. It's different. But for new money, we like that flash, right? We like these different brands, Roger Dubois or Frank Mueller, or we like, what's the other one I'm thinking about? Richard Mille. Like those extreme flash, man. We like the flash cars. We like all that stuff. But in regards to your Rolex story, I think it's fallen apart because I heard a lot of people tell me, Rolex, such a great investment. I don't know about that. It was a great investment when we were in a boom time for the economy and stimulus money and everything like that. Rolex watches have now down 7% plus just in the past year, while the S&P 500 and the NASDAQ are doing great. I'm not sure those Rolexes are such a good investment, right? And I do regret sometimes buying my plaid. And that's until I hit the gas pedal. And once I hit that, woo, baby, I don't regret it anymore. I hit that pedal one time, whoa, man. It's like that guy or that girl that just, they treat you bad, but you're just addicted to them, man. That's the plaid. And you're like, got a soft spot for you, plaid. Anyways, back to Ulta, okay? Listen, in regards to Ulta, I think it's actually not a bad buy here. I'm not ready to buy it myself because there's too many other opportunities in the market, but I don't think it's a bad buy here. Stock's about $390 right now. I could see potential downside worst case scenarios, like $275 on this stock. That would be the years kind of come to a standstill in regards to same-store sales, or even same-store sales go like negative, which is certainly a potential. If that happens, you could see the stock in the 200s, right? And that's kind of the worst-case scenario I really see from Ulta, because then you'll have buyers step in and it's kind of view this time as just transitory and it'll pass. I think potential upside for the stock long-term is maybe like 700 in regards to this. You're never going to command a super high forward P, but to see the company maybe be able to get to $1.5 billion or maybe $2 billion in net income, it's a potential, right? And so if they can get to somewhere around $2 billion in net income eventually from about 1.2, 1.3 right now, then you could justify around a $700 stock price at that particular time, right? And you would still be trading at fair multiple. So yeah, I actually think the risk reward for Ulta is attractive, and it's attractive for the first time in a long time, right? But the one thing I'll also say in regards to this, I don't think you're going to get a bottom until Estee Lauder bottoms. Estee Lauder is down 42% plus in the past year. It's shown no signs of bottoming yet. If we can get a bottom at Estee, I think that will also bottom out Ulta. But the problem is all these stocks that are kind of in this space, they've just been pulling each other down, man. Estee pulls down Ulta and pulls down Elf, and they just all kind of pull down each other. It's just Elf's the one that is by far and away the granddaddy greatness of them all. But yeah, I think if you can get a bottom in Estee, I think you can get a bottom also simultaneously in Ulta, and then you'll kind of head up from there in regards to that, right? I do think in regards to Estee Lauder, you're getting very, very close to a bottom. And the reason being, I was just looking, obviously the stock's just had a complete free fall, right? But also you're looking at it out here, right? Raymond James downgrades Estee Lauder companies to market perform from strong buy. There's going through the cycle. I talked about Celsius could be going through very soon. Like Estee Lauder's going through that currently, right? And Celsius hasn't started that cycle yet. Estee Lauder is maintained at equal weight by Barclays. Estee Lauder shares uncertain amid flat China market. Oppenheimer says, very bearish note there. Barclays adjusts price target on Estee to 117 from 136, so they're bringing down price targets. And that's just all in the past few days, right? And so usually when you start to see all these analysts coming out, you can go in bearish, bringing down their downgrading the stock, bringing down price targets. You're getting close to a bottom. Doesn't mean Estee's bottoming right now, but it's getting close. Yeah, I would say probably bottoms within the next 3 months. That's kind of my opinion in regards to that, okay? Now, Boston Beer Company, the stock's addicted to going down, 27% down in the past 5 years. And I've been doing some work on this company, right? And they own, if you didn't know, they own, obviously Sam Adams is their big brand. They own Twisted Tea as well, which puts on a commercial every 7 seconds on college football games. I swear to you. It's like when I watch college football, September, October, November, it's like Twisted Tea is like we're advertising to the college kids or something. I mean, it's insane. Truly, they own that brand as well, which competes with the other big brand in that space, which is called, what's the other big brand in that space? Truly, and Oh, what's the other big brand? Truly? And is it White something? Dang it. Can't think of it. You know what brand I'm talking about. I don't know why I'm thinking White something. They also own Angry Orchard as well, right? They got their very popular beer, which is Oktoberfest, which is a Sam Adams type, right? Which, by the way, why are they showing it in can? Like, you always think of that as bottle. But anyways, in regards to stock, I'm trying to figure out, is it a steal deal or is it not, right? The market cap's around $3 billion, just over $3 billion for this company. Looking at the forward P, 2-year out forward P, doesn't look very undervalued. It looks kind of like fair value. But the other weird thing I'm looking at here is look at current year expected earnings per share growth, 67%. Next year EPS growth expected 24%. But yet look at current year expected revenue growth, only 2.5%, and next year revenue growth expected 4%. Something seems off here. I'm like, are they going to really be able to put up these EPS growth numbers with that week of revenue? That's another thing I got to try to figure out here, right? And then net margins have been very bad for the company here recently. So I don't know. I got to do more work on Sam. But it honestly goes to show these drink stocks are just doing horrible right now, right? Monster's doing bad. Celsius is doing awful. We know that, right? You got Starbucks doing bad, right? You got Boston Beer Company doing bad. It seems like all these drink brands are doing very bad. I think PepsiCo, let me check Pepsi and Coca-Cola. If I recall, both those stocks are doing bad as well. Let me check these guys out. So let's see Coke here, KO. This should be interesting. So Coke, 1 year, Coke's up 3%. So I guess Coke's doing well compared to these other guys, right? 5-year Coke's up 19%. And then let's see PepsiCo. Now, Pepsi also has food items, so that is something to kind of consider here. Pepsi is down 12% in the past year, which once again goes to show the drink space is weak. Pepsi down 12% the past year. Celsius just fell off a cliff. Boston Beer is down. Starbucks is down. Like, it's just these drink companies are doing very, very poor, which means stagflation. Right? Maybe the inputs for their businesses just continue to go up and up and up, but they can't pass it off to consumers. Maybe consumers are passing on those products because they're gotten too expensive for them. Yeah, a lot of these drink companies are doing very poor, but could be an interesting time to buy a lot of them. I will be honest about that. Could be an interesting time to buy a lot of them. And they just hold long term with those sorts of companies, right? And those sorts of companies usually perform very, very well when you actually go through an unemployment recession and those sorts of things as well. So, yeah, is problems in the drink space. Big problems. Maybe everybody's just going to drink water. Hey, everybody would be healthier if we all just drink water, right? Now, next couple days, big UPS reporting tomorrow morning. Tesla, Maesla after the bell tomorrow. Google, McDougal, Enphase, Visa all tomorrow. Oh my gosh. Capital One, what's going on there? I was listening to American Express conference call last night. Sounded pretty dang bullish from American Express, but American Express has a very different customer base than Capital One. So what's going on there? And then we got Chipotle, which is big for me, on Wednesday after the bell, and see if those puts are looking real good, okay? All right, guys, if you're looking to take your investing game up to a much higher level than where you're at right now, apply to join my private group. That'll be the pinned comment down there, and we'll see if you're a good fit to join us in there. Much love, and have a great day.